Hi there, Sarah here. So I'm just actually sharing this quick extra update for February because we only have 1 week left in this month and 2025 is just flying by. With that said, with 1 week left in February, we're typically thinking of those T4 and T5 deadlines that are fast approaching at the end of this month. And so with that thought in mind, and I guess maybe because I'm wrapping up T4, T5 deadline pretty quickly, the thought kind of transitioned over to the growing trend, which is the presence and the increasing hiring recruitment of subcontractors. And this is a trend that I've been noticing, and it's not surprising because, again, with the gig economy, with the economic conditions, a lot of people are gravitating towards that more flexible lifestyle. So anyways, the focus for this one is actually on T4a, which is maybe something that isn't often discussed. So just spending a little bit of time talking about the T4a reporting requirements, which it has been CRA's long withstanding position that businesses have to issue a T4a for their subcontractors if they are paying more than $500 for those services in the year. With that said, since I would say 2011, enforcement has been pretty limited in this area. And so it's not been the biggest focus for many businesses because it's a lot to ask. And I'll spend a little bit more time talking about that down below. But with that said, with everything, CRA is increasing their compliance efforts. And so just giving a little bit of background here, determining whether you feel like the business should be filing those T4As, even though they haven't traditionally done so in the past. Okay, and that is the purpose of this particular recording. So first off, why does the CRA care about this? It's actually, I don't know, this is my opinion. They want access to more information, right? So I would say an area they've always been really interested in, maybe more insight to the construction industry. And so that industry actually has their own form, which is specifically the T5018 form. But, it's quite clear that that's what they want more insight to just make sure things are being reported accordingly. It's also CRA's attempt to crack down on unreported income so that underground economy, effectively the business, is making it so much easier for CRA to come after those individuals who are not appropriately recording the income that they've received in thanks to something like a T4A. Okay, so really the business is doing their hard work for them. Another big area for CRA is to always target those misclassification of employee versus subcontractor positions. So in recruiting someone, are they actually an employee or are they actually a subcontractor? There are rules, tools to make that assessment, control tools, etc. And also CRA's attempt to better identify any potential personal service businesses, which they hate. Okay, so there's obviously many reasons why CRA is interested in this, and they put the onus on businesses to really help them, target better. The debate, the argument between CRA and say many tax practitioners is that the onus and the burden of these T4A reporting with such a low threshold is really difficult. That box 48 of that T4A is just too broad, right? Does the business then have to issue a T4A to Shaw for internet services provided? Do they need to issue a T4A to the electrician who came for that one-time repair? So given that definition is so incredibly broad, it creates just a really intense owner's responsibility on businesses to meet that compliance requirement. Okay, so I would say taking 3 steps back, step number 1 is to actually first check the worker classification. So whenever hiring, recruiting, first double check the classification is actually appropriate. So is the provider of these services truly a subcontractor? And again, there are tools to make that assessment. Or are you actually hiring an employee? Okay, and I would say this is CRA's main target, and I have some extra resources here in terms of the tools to make that assessment. But that's number 1, just making sure you have that classification first correct. I would say that's a really big target for them. And okay, so yes, let's say it is indeed a subcontractor. Then we move on to step number 2, which is to collect all the appropriate information for this subcontractor. So with any new contractual relationship, there's always things to double check, right? Are you happy with this agreement, the terms, the rate, etc.? So collecting things like their legal name, their business name, or maybe their SIN number or business number, whatever it is, just keep that handy. And you should really have these provider invoicing the businesses or invoicing the business for the service provided, right? And you keep these invoices for your records. Now, at that point, step 3, right? Step 3A, step 3B is to make that determination whether the business needs to file those T4As for said subcontractor. And in order to do so, hopefully the information is readily available. So at any point in time, you can answer the question, okay, subcontractor A was paid X amount in this year. Subcontractor B was paid Y amount in whatever year, right? So what is the source of truth? Is this readily available? Therefore, once that determination is made that yes, the business should file the T4A, right? The risk is high or the requirement is really there, then you have that information ready to go. Okay, so just providing these suggestions, right? Step 1 and step 2, quite important first to make that determination. And then step 3 is really just stay organized and determine, okay, yes, right? Greater than 500, yes, we should file. Now, in terms of the impact for the 2024 taxation year, which we're now working through this tax season, while the T4A deadline is traditionally at the end of February, so that is 1 week away, CRA did announce a bit of an extension in the sense that they're not going to impose those penalties or late interest charges if filed by March 7th. So this just gives, that pause to determine, okay, does any of the above impact the business? Is there any discussion to be had? Is there anything to revisit? And what is the impact there for 2024 or maybe for 2025? Okay, so that is just a quick update for today, which is February 21st. And yeah, hopefully that was helpful.